Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 4th of September. Starting off with the FTSE 100, which is broken not only out of that or below that uptrend line there from earlier last month, 83.40, but has hit the next logical target at the 50-day line, 82.30. Below that, on an end-of-day close basis, got the risk of a move right down to the floor of that rising trend channel from this time last year at around 80.30. And obviously that would be rather disappointing. We're basically testing August support. The RSI now below the neutral 50 level at 45, so we don't want to see this market close where it is now. Early and end of day close back above the 50-day line would then give us a chance of a rebound back to 83.40. The DAX is next, and I suppose one can guess what this will look like as well. Gap down back below that broken May resistance line, so that was 18,600. Below that, as a risk of a move down to the 50-day line, 18,300, which was suggested previously. The positive here is that we've got the RSI still above neutral 50, and an end-of-day close back above 18,600 would hopefully lower the chance of a move down on this market. Next up is the Dow, which obviously got smashed yesterday. Here we've also got that July resistance line back in play. That's now become support. We're just below that at the moment, 41,000, the nominal level. Bearish divergence there, so there is a chance of at least a retest of the top of the latest gap, 40,200, and which is also coincides with the area of the 50-day line just below that. So that's hopefully where this market, or the pullback here, will find its support. On the upside, really needing more end-of-day closes back above 41,000 to take the edge off yesterday's move down. On to Bitcoin, and here we were struggling below 60,000, and we continue to do so. The fear was that we would have to hit that February support line projection. That's now at 51,300, and with the double failure of the RSI below neutral 50, that looks as though where this market's going. 50-day line already falling. What we don't want to see is that the 200-day line will start falling as well, and then we sort of roll over towards the 50,000s area. On the upside, simply an end-of-day close back above 60,000 would be the first sign that we are turning around, and that looks rather difficult given that we've had multiple failures to get back above 60,000. On to gold, and here the picture, one of, I suppose, consolidation, but the lower end of the range here around 25.20, and below that there's a risk of a move to the floor of that rising trend channel from December, and the 50-day line around 24.50. We really need to see 25.50 plus here to allow us to assume that we could get up to the top of the channel there, 26.50 by the end of this month, but looks as though it's pushing it. In terms of the RSI, it's at 54 on the right side of neutral 50, so that is still a plus and explains maybe why this market is hanging still relatively near the highs. Moving on to the stocks, and starting off with Echo, a stock which I forgot the other day, but the idea that we're in a rising trend channel base, and we are sliding above a rising 50-day moving average seems to be working now, and here looking for the top of the range, basically around 0.05 by the end of this month, or even sooner than that. The 50-day line rising, giving it the stock a good look, as did the gap close signal that we had on the 30th of August. On to Gelion, or Gelion, depending on what you want to call it. Here we've got the stock bouncing or ricocheting off a rising 50-day line there at 24 pence. The overall pattern here is hopefully that we're in a rising trend channel, top of the channel there from back this time last year up to 34 pence, and looking for that maybe as soon as the end of this month, back by the unfold gap to the upside that we had back in June, and the support above the 200-day line there at 21 pence. Obviously we want to stay above that line ahead of a move to the low 30s. On to Helium 1, where the message is that actually finding helium seems to be negative for the price, especially today. Here you can see that we've fallen out of that rising trend channel after the gap down, and we had basically 3 attempts at filling the gap up to 1 3/4 pence, which obviously failed. That is disappointing. We've also got a key reversal to the downside, so breaking yesterday's high and then falling back. We've also struggled against a falling 200-day moving average, which suggests that we will have the test of the 1 pence area that we were fearing. RSI also not looking great, double failure below our neutral 50 level and falling at the moment. So back down to a penny unless we get a surprise end of day close back above the 50-day line and 1.3 pence. Onto a stock which I was quite excited about the other day, Indus Gas, and the reason for that was the V-shaped bull flag that we've got there bouncing on a rising 50-day moving average. We've got our target hit basically around 21 pence for the first time, looking for that to happen the second time. End of day close above 21, and we're looking for perhaps as high as the upper 40s there, the upper parallel of that broadening triangle base. What we don't want to see in the meantime is any weakness back below the 50-day line, and probably in the near term, really the 15 pence area, as that was resistance on the way down back in June. Nice announcement today from Metals One, and here still the hope that we've hit the bottom there. There's an uptrend line in the RSI window, which hopefully will be a leading indicator on a recovery towards the 1 pence area, or at least the 50-day moving average at 0.85. That's the crucial thing at the moment. But that RSI hint may be that we're finally turning around from the sub 0.8 pence zone. Onto Mkango, and here nice bull flag there above a rising 50-day line. The initial resistance there, that 6.75 pence area, but above that, looking for eventually a push up to as high as 11.5 pence, maybe by the end of next month. Obviously, the elephant in the room is the 200-day moving average at 7.25 pence, and that needs to be conquered because it hasn't been conquered basically since the beginning of this year. But a bear trap gap reversal back in July, and that's what we're living on at the moment as in terms of recovery hopes there. On to Mosman, and here it looks like it's the 9th of September is D-Day. We're still grappling with that 50-day line there at 0.055. Want to see a proper end-of-day close above that. Resistance line there at 0.061 also to break, but I suppose that the main point at the moment is that we're holding well above the 0.05 pence level and the floor of that rising trend channel in the mid-40s. RSI rebound off neutral 50 also gives the shares a slightly better look than they've had for a while. On to type of stock we don't normally cover here, are Naked Wines, largely because it's rather bigger than most of the companies here. Actually, 40 million market cap isn't that much bigger than most of the companies here, but the interest here is that we've got a potential rising trend channel rebound, multiple tests there in the low 50s. The missing ingredient here at end of day close back above the 50 and 200-day lines at 56 pence. If we can get that, then we could be up to 75 pence by the end of next month, although obviously that doesn't include any fundamental things in the mix there. Polarean is next with a very upbeat RNS today from the company. Still has the problem of trying to break that resistance line there from back in July, the level there around 1.75 pence. So above that, we could dream of a move up to the top of the rising trend channel at 2.4, maybe by the end of next month, but it has to be admitted, this still looks like a rather heavy situation, especially after that massive gap down that we had back in May. Obviously, we don't want to see any fresh lows below 1.65, the initial September support. On to the last two, and really great announcement today from Rockfire. I think a 500% upgrade to what they're sitting on at their key Greek asset. A broadening triangle base there from back at basically this time last year. Top of the triangle there at 0.4 pence, and it has to be said, after today's news, it's difficult to work out why the shares aren't at least 0.35 or 0.4p with the rebound that we've had. Bear trap gap reversal today, and certainly while we are above the old July resistance of 0.22, we'd be confident that we can make some progress towards the top of the range. Finishing off with Vast, where every day that goes by without a placing is a bonus, but here up 10% so far. You can see that there's a lot of resistance there about around 0.11, looking for the 50-day moving average towards 0.12, best case up to 0.16, but that certainly is a very bullish way of looking at the shares. That's it for me today. More updates tomorrow.